Good morning, everyone. Um, Thank you for being able to join. My name is Jabir Sardharwalla. I'm Chief Investment Strategist for Skybound Capital Group. Today, I'm going to be discussing the outcome of the US election. Just to give it some context, the focus will really be on what the implications are for markets and also intertwined with that, to an extent, the geopolitical situation. Just in terms of housekeeping, to let you know, my colleague Ross Muller is also on the presentation, but in the background, he's going to be keeping an eye on questions, and then at the end, he's going to relay those to me, and that's when you'll see him appear on the screen. So, without further ado, I will begin. Just allow me, please, to call up my presentation and put that into PowerPoint mode. And I will then begin. So as you see there on your screen, um, the latest state of play as of close of business yesterday was that clearly Donald Trump won. I think you all know that. It's headline news. He's actually now at 290 odd. I think it's 295. I just checked a couple of minutes ago. So it's often forgotten that when you have a presidential election, you actually have four elections going on. The focus is so much on who the president is that we forget about the other three, which are just as important. So Trump has obviously won very convincingly the US presidential election. However, down here on the left, you have the current state of play in terms of the Senate. Now, the Senate's a little bit of an oddball in that not every senator's seat comes up for contention. They split that a third, a third, a third, each third every 2 years. And so this time round, it generally, I wouldn't say favored the Republicans, but the Republicans didn't have much to lose. But actually, they gained 3 seats from the Democrats. This was very convincing indeed. So they now have the majority. 50 is the middle mark. There are 100 senators in total. They've already got 52. So they now control the upper house. That's the sanctioning body in Congress. On the right-hand side, you have essentially the House of Representatives. That's the lower house. This is a really important body because this is where rules are enacted. It's so important. Anything, if you have gridlock there, then you have an impasse, and that can be very problematic. It would have been a bigger issue for Kamala Harris. But still, ideally, Trump would like to get that. And at the latest count, he's now up to, I think it's around 208 or 209. He needs to get to 218. It looks very much, even with the remaining seats to come in, it looks like he's going to get the majority that he needs. I haven't shown on there one more election, and that's the governors. And the governor's system works a little bit like the Senate. He's already got a majority there. That's in the bag. So he's got 3 out of 4 elections in the bag and looks like he's going to get 4 out of 4. That's a very powerful position to be in. I was saying to my colleague earlier, Ross, just now, that they nicknamed Bill Clinton the comeback kid. I think that's quite applicable to Donald Trump. When you think where this guy was, what he's gone through, to come back with such a convincing majority, it's very powerful indeed. There's one more thing on this that I want to comment on. Look at the percentage votes. So not only did this time Donald Trump win by way of a public mandate, but look at the difference. It's almost 4%, a little bit less. And if you remember, the opinion polls had it so close that it was like 1%. It's worth now bearing next time that such a situation arises, and they don't come up very often. This is a very unique situation, probably because we're dealing with Donald Trump. But should it ever happen, it's worth bearing in mind that, for me at least, is the true margin of error that should be factored in going forward. Statisticians will always come up with their own measure. I understand why they have to do that. It's just it's part and parcel. But the reality of it all is that he won by nearly 4%. That was the margin. So moving on from there, if I can move. Yeah, here we go. So this is quite a busy slide. Don't worry, I'm not going to go through all of this. But the point that I want to make here is the importance of having full control of Congress, which is this bit here, versus no overall control. You see, that was never going to be as big an issue for Donald Trump as it would have been for Kamala Harris. If I'd shown a slide with Kamala Harris spread out, like this in this format, she was heavily reliant on this portion at the top. So if she hadn't got control of Congress, she would have got very little done. Whereas look at Donald Trump here, even without control, assuming that he doesn't win the lower house, which is looking unlikely, but let's assume he doesn't win it. You see, he can rely on something called EOs, executive orders. Executive orders do not require the approval of Congress. Congress can try their best to intervene, but he can go ahead and push. And this is Donald Trump policy. All of this, what you see here, this is what he's all about. That essentially defines his presidency. And if he gets any one or more of these, he'll be a very happy bunny. That means you're going to have a full ride in Congress. Now to some of the key policies. This is really what's going to determine the outcome in terms of markets. We're already seeing it. Some of you, I'm sure, have heard about the Trump trades. I'll highlight that in a second. But let's just look at some of the key things. On inflation and price controls, Trump actually wants to... Oh, and please, I just want to bear in mind, if there's one president who has a track record of delivering on his pledges, it is Donald Trump. So I'm going to make an assumption throughout this, certainly as I have in my thinking on this, that he will do what he says he wants to do. He wants to put a cap on credit card interest. This plays right to the public, especially the little guy on the street. Electric vehicles. Now, I think he's going to change his tune on this. Why? Because of a certain Elon Musk. He's already coming around. He's already softened his language here. He was initially against it, but now I think he's bending. And there's a big issue here, because if you look at his deputy, his vice president, Vance is so closely tied to Silicon Valley. That's where they got a lot of their funding from. So I think we're going to see a very tech-driven era under Donald Trump's second term. Housing. He's done a little bit of swinging here, but he does want to make housing more affordable for those that are struggling, particularly around the peripheries of cities and suburban areas. This is exactly what his voter base want. Social security, he's always had an issue with this. He's never really given a clear line. Donald Trump, as I understand it, based on the research I've done, he's the kind of guy who says, I don't mind dishing out on Social Security, but I need to know that I'm getting value for money on this. That's why he flips back and forth. Fiscal policy. I'm going to delve in this a lot more in a moment, but this is really what it's all about. He's going to extend a whole load of things in terms of tax cuts. This is what the man is about. He's announced it on corporation tax if companies bring manufacturing back to the UK. This is going to require a lot of spend, but this is really his ethos, made in America products. And the rest of the world is already beginning to feel this. Not in a big way, but they are beginning to feel it. And it comes to the issue of trade, which comes in nicely to the second point here. Trump has proposed, and I stress proposed, a tariff, an import tariff on anything from countries outside of China. And in the case of China, we're talking 60%. That's what he wants to do. Now, that's a very big headline. The reality is that today, exports of goods by China to America account for just 3% of Chinese GDP. So does it mean China is going to go down the drain? Absolutely not. They're nothing like as concerned as, say, 10 years ago when it was closer to 10%. That's how much it's dropped. But given the precarious state of China's economy, at the margin, that will have a telling impact. Education. This is a funny one. He wants to get rid of the Department of Education. He wants to subdelegate to the states. So it's almost like in the UK saying, okay, government will no longer make decisions at a national level on education. We're going to let the local councils and shires take care of it. America's always been a bunch of states. This is not new. Different states have different taxes. Subdelegating to the individual states is not necessarily a bad thing. By the way, education is not the only department that he wants to get rid of. He's actually said he wants to get rid of the FBI as well. This is going to be fascinating. I want to see how he even attempts to approach that one. NATO and US alliances. He is very, very vocal about this. Basically, he, on behalf of the US, is fed up subsidizing NATO. America is the lion's share contributor, and yet everyone benefits from their protection. He said that has to change. And look, he's got an argument there. Definitely got an argument. It's put Europe on the back foot. Russia, Ukraine, fascinating situation because we know that he takes a soft line with Putin. He definitely does. I wouldn't be at all surprised if he's already had a phone call or two with Putin. He doesn't assume office until the 20th of January next year, as is normal with US elections. Between now and then, I'm sure he'll have a game plan worked out with Russia. And when he has, he will go to the Ukrainians with a fixed menu and say, guys, this is what's on offer. Take it or leave it. What is Ukraine going to do? In fact, what will Europe do? They can't openly fly in the face of whatever he does. So I think it's a tricky one for Ukraine. Climate change, look, I think that's pretty well documented. I'm not going to dwell on this. He really wants to ease up the rules. The point I want to make here is that one of his pledges to bring down inflation was based on the premise that he would start to flood the market more in America with cheaper oil and gas. And America is now so advanced in the field of shale technology that it can do this. So much so that it's causing endless headaches for OPEC. In fact, now with this result in America, I think OPEC's bargaining power has really started to go downhill even further. I mean, look where oil prices now are. This is all part of the Trump trade. Last but not least, immigration. I don't think I need to dwell on this. We know where he stands on that. We remember all that stuff about about Mexico and the wall and so on. He's just going to really tighten up on this. So, what's it going to cost? Because this is at the heart of the whole thing. Trump has a record of really ramping up the US fiscal deficit. So, in this analysis, we're looking at a low, high, and base case. Let's focus on the base case. We are talking about over this period, 2026 to 35, so 10-year period, we're talking about almost $8 trillion more on the deficit. And this is how it's broken down. I'm not going to go into all of them, but to highlight a couple, the first one, he wants to extend. This includes modifications to the Tax Cuts and Jobs Act, the TCJA. This benefits the lower paid guys. He wants to lower corporation tax to 15% for domestic manufacturers. That's big. And when you think Ireland here, the closest to our shore in the UK, has a tax rate of something like 12.5%. I mean, that is very attractive for anybody. Because when you think what US manufacturers overseas, particularly in China, are having to spend defending intellectual patents just on legal fees, suddenly now this becomes very attractive. And I did a calculation on this. Actually, 200 billion is roughly what I was coming up with, give or take a couple of 10, 20 billion either side. So it's not an expensive program. The bulk of it is going into the TCJA. That's what he's going to do. He wants to exempt overtime from income taxes, particularly on tips, things like that. So that's another 2 billion. That benefits the lower paid. Um, and then this issue around taxation of social security benefits. So this plays to the previous point about him flipping back and forth on social security benefits. So if we take that, this is the net impact of all of those summarized. The high, low, and base case. Nearly 8 trillion on the base case. So US debt as a percentage of its GDP, this is the range we're looking at, essentially. The central figure there is that it becomes about 143% total debt to GDP. This is the long-term problem that we're going to be looking at for the US. Unless they can develop and generate a growth rate that can outpace that growth in debt. And in the process, the investments can pay off or pay down that debt. It's a two-pronged action. You need debt to become a smaller share of that pie, even though it can still remain a large piece of the pie. And secondly, somehow or other, you need a mechanism by which debt can be reduced. This is a scenario under, these are several scenarios of what kind of government we might have. So on the left here, the first two columns, this is an outright Trump sweep. Now, this was done by Deutsche Bank and others, as you can see at the bottom. They've chosen to split it in terms of excluding tariffs and with tariffs. Frankly, if we get a Trump sweep, I think you're going to be looking at with tariffs. Undoubtedly, I think that's the likely scenario. If you don't get a Trump sweep, in other words, if he doesn't manage somehow to get control of the lower house, then you're looking at one of these two situations, and it starts to lean more to this side, but not overwhelmingly. It probably means that he can't slap a 10% or 15% tax on non-Chinese goods in the interests of American allies. I think he'll get away with China, but as I said, I mean, that's not going to be an almighty impact. So you're looking really at two scenarios here. This one, where the fiscal deficit is less. It comes down to about 7 trillion in 2025. Bottom line is it's still substantial. It's still massive. So now I'm going to turn to historical track record. You know, we're all familiar with the old saying, past performance is no guarantee to the future. In Trump, that's not entirely correct, because we know what to expect with Trump. He's been there, done it, seen it. And I'm going to do a compare and contrast with Biden-Harris. So during Trump's time, inflation did actually go up 5%. Now look at the next chart here on inflation. And this is the point, one of the key points that markets will be watching ever so closely. See, I can understand why under Biden it went up so much, almost, well, just over 19% over his tenure. I get that. Part of it was, first of all, COVID, supply chains. That was the first bit. And then guess what? You had Russia, Ukraine. It's all explicable. Trump came in at the back end of COVID here. Up to that point, inflation had already risen. It was in excess of 5%. Now, I long argued quite some time back, 2-3 years ago, I put my case that we were going to start returning in any event to a 1960s style inflation picture. Subsequently, what happened in the 70s was that you had the whole oil crisis, which was kind of tantamount to what happened under Russia, Ukraine. What's happened here is that you had inflation rising under Trump, and because of his measures, that came down to the demand side. If you look at the components of inflation, there are essentially three. One is the demand side, i.e. consumer-driven demand. The second is a supply side crunch, which is what you had under COVID. That's really kind of unavoidable. I mean, you remember all those ships that were clogging up harbors, the queues forming the Suez Canal, and so on and so on. And then there's a third component, which is the impact, the secondary impact on food caused by rising energy prices. And what was happening under Trump was that this was starting to go up as a result of the demand side. If you go back to this hiring, this is a bit misleading because it was heavily warped by the COVID picture. National debt, I've just referred to that, I've just alluded to that. Even without COVID, under Trump, it rose $8.4 trillion. Under Biden-Harris, adjusted for COVID, it was half that. So then we come on to growth, which is this chart. And you'll find that for the most part, they were pretty much the same. The reason that under Biden growth had a more variable picture was entirely because of COVID and then Russia, Ukraine. That's all it was. But otherwise, they were pretty consistent. Growth continued in the US quite comfortably. Then we come on to markets and particularly stocks. And for that, the S&P under Trump just absolutely boomed. And it was particularly under the tech names. If you look at a breakdown of that, so the shaded bars represent individual indices. So for instance, you got the famous Mag 7 here. Technology absolutely boomed under Trump. And when you consider the quote unquote alliance that he has with Elon Musk and the rest of Silicon Valley, I see no reason why we shouldn't see some sort of repeat of that. The solid bars represent individual sectors. And what's quite strange, because Trump is often perceived as being a very pro-energy individual, you'd think that energy would have boomed under Trump. It didn't. It actually fell back because he gave them more drilling rights. He removed shackles. For instance, legislation that that kind of straitjacketed oil producers and gas drillers. And as a result, there was more of the stuff coming out of the ground. He opened up pipelines with Canada, for instance. So actually, oil prices came down. And then in between, you've got a mixed bag. On a world scene, it varies. It really varies. So, for instance, if you look at bond markets, UK 10-year gilts thrived under Donald Trump over that entire period. This is the 2016 to 2020 era. Because we had a lot of back then certain volatility created. It was particularly around the tariff talk, and then on top of that, the trade war with China. That created a lot of volatility. It wasn't widespread across the board, but it was very specific, and it was enough to instill fear in people. And that reflects even to other bonds like BTPs, the Italian 10-year bonds. In terms of equity markets, it's a bit of a mixed picture. But you find that equity markets, like for instance, in certain areas, well, to be honest, if you take, for instance, European high yield, that's a quasi form of equity. It's essentially high yield bonds, which give you equity upside, but with a coupon. They fared very well. That's where people flocked. And then at the end here, you've got the oil picture, which I alluded to earlier. Volatility. So on the left, you have Trump. On the right, you have Biden. Overall, you're looking at this sort of range for Trump. It was generally well controlled, except when you had spikes here. And these were around the trade disputes with China. They were really significant. Under Biden, obviously it's a mixed bag because you've got COVID, you've got Russia, Ukraine, but you had more consistently heightened volatility. So it was actually raised, and it's become more raised recently. You've got the whole war scenario, Israel and Hamas and so on. The Russia situation is carried on with the fueling of the war in terms of favoring Ukraine. So for markets in general, and you've seen some of this play out already, you're seeing phenomenal dollar strength. Yesterday alone, the dollar was up 2%, the trade weighted index, just yesterday alone. This is trying to say that over a Trump term in office, it's going to rise 7%. So, look, it's impossible to get this really accurate, it's really exact. But I think the direction is pretty clear. Whereas with a split Congress, the dollar still remains strong. So you're going to have a situation where it will be pockets of risk on, but it's going to favor the US. And the reason it's going to favor the US again is because he's bringing manufacturing home. He's going to foster domestic manufacturing. And secondly, he's bringing out tax incentives to help Americans on the ground back at home. So he's going to really fuel demand, consumer demand. And I think that's really significant. This is essentially a classic Donald Trump style insular economy, polarized, separated from the rest of the world, but his buddies, his friends will be defined by the countries that he can do trade deals with. As we know, he loves doing trade deals on a bespoke basis. So consequently, the dollar against other select currencies here, it's going to fare very well. If Congress is split, I think Japan's going to be an interesting one because on his own, in a clean sweep, the pressure will be on interest rates to go up. Debt funding is going to be massive. Yields are going to go up. At the bottom, it shows over an entire term about a 40 basis point rise on the 10-year bond. Yesterday alone, it shot up over 20 basis points at one point. I think at the end, it settled about 20 basis points. The 2-year rose sharply, just under 10 basis points. So I think actually this is skewed to the upside. I think that's a very modest kind of situation. The thing to worry about is inflation. That's the one that worries me because he's got to fund all this and he's got to generate the growth to be able to deal with that debt. And I don't know how he does that. And I mentioned there are two ways of effectively bringing debt down. One is to grow the rest of the pie. The second is to create investments that can pay it down. But there is a third, and that's inflation. We know inflation destroys the value of your assets, but it also destroys the value of your debt. It destroys both sides of the balance sheet. So, he may not, I don't know if he's thought it through that far, but possibly he's thinking, look, if I have some manageable amount of inflation in the system, that's going to help me with my debt picture, plus whatever real growth I can generate. Earnings. What this chart's trying to demonstrate is that in the long term, it really doesn't matter which government's in power. Because on the left-hand side, you have the corporate tax rate, which currently is around 21% or something like that. That's going to come down to 15 for those companies that bring manufacturing home or just carry out manufacturing at home. The other two lines, as represented by the right-hand axis, gives you your annualized earnings growth. And that is coming in at, broadly speaking, about 6.5%. So companies seem to do pretty well, regardless of the government. And that's one of the unique defining features of the US government. Pretty much any US government that I can think as far back to. They really don't meddle in American creativity. That's where America's so good. Look at their whole Silicon Valley. You'd kind of think that things like Facebook and co were all invented in America. They have their roots in Eastern Europe. They were invented, devised, designed by Ukrainians and other East Europeans. But the Americans bought these out very early, very quickly. And they've developed a whole valley based on it. This is where they're so good. They foster creativity. And unless anything happens, I mean, you need to turn to a very leftist regime to actually impede that. There's no real there's no real crowding out effect when it comes to the corporate side of the picture. So I don't really see anything that will interrupt that. And that really is the presentation. It's a short one, but that's the overall picture. To sum up, if I can, just in terms of circling back to the famous Trump trades, what does that actually mean? In a nutshell, I would define it as the reflation trades. That's what it means. Trump is all about reflating the economy. He does that partly, well, he does that massively through fiscal reflation, as I showed you earlier, that we're talking trillions. He does that by fostering creativity. He does that by liberalizing rules around energy, conventional energy production. He encourages money to flow back into US dollars. So that means because of this inverse relationship between the US dollar and commodity prices, that's why yesterday you saw a big sell-off in things like gold. Those are the bulk of the policies that relate to the Trump trade. And so if you are heavily invested in the US, particularly in tech type names, if you're short treasuries, for instance, because they took a pummeling, then you're doing very well. Now, if you don't have those trades, please don't panic, because it's at the moment you're seeing, I would call it the Trump euphoria trades. This is not going to last. It will moderate. It will definitely moderate. Let's see what kind of deals he comes up with on the trade front. Let's see what he actually does in terms of tariffs. Let's see what he actually does in terms of geopolitics. That's something else I haven't really talked about in detail. But I will say this: my picture of a Donald Trump in office on foreign policy is that he will actually give Putin some sort of olive branch to try and come back into play. I think attempts by previous governments, so that's the outgoing Biden-Harris administration, the outgoing Conservative administration here in the UK, and other European governments, has not helped the situation. Sanctions never work. I mean, they didn't work on South Africa. I've never known a situation where sanctions actually work. They cause more problems. They create more resistance. They create more antagonism. I think Trump's the kind of guy who will drag Putin around the table and say, right, what is it you want? And here's what we can offer. And then he'll go to Ukraine and say, right, guys, this is what's on offer. It's a fixed menu. Take it or leave it. On the Middle East, oh, so by the way, I think that could help defuse the situation and bring down geopolitical spreads, risk spreads. I think actually after an initial period of some turmoil, I think we could see an improvement there. He's already had a phone call. This is public. It's in the news. He had a long chat apparently with Zelensky, who was very quick off the mark, because Zelensky knows that he's on the back foot now. In terms of the Middle East, I don't think it's going to be plain sailing. I was originally of the view until about 48 hours ago that Israel now has carte blanche to do what it wants and to take out Iran. Not necessarily. One of the reasons why Kamala Harris lost is because the Arab American population, this surprised me, the Arab American population was so livid at the Biden-Harris administration for letting Israel get away with what they've done, that Trump, meanwhile, seized the initiative and actually sat down with them and said, look, this is what I'm going to do for you. And you kind of have to think that if that's what he's promising, then that's what he's going to do. It was certainly enough to convince them to not just not vote for Harris, but to actually go out there and vote for Trump. That's quite significant. So then that leaves China. And Oh, sorry, there's one more in the play here, which is a fascinating one, which Trump started, and that's North Korea, who, he went out. If you remember, in his first term, he went out and met them. I think he's gonna somehow cut them some slack. And then look at the geopolitical map. So we've seen several shifts now. We saw under the Cold War, US versus Russia, AKA or quasi NATO versus USSR. Then it kind of moved from that to the US versus China, with China's satellites, including Russia. I include Russia in that as a satellite. Now I think we could actually see some sort of reversion to a US Russia, at least US Russia and US China, and that's very reminiscent of the President Nixon days when Henry Kissinger was foreign secretary. He was able to keep Russia and China at each other's throats by playing them off. So we're going back, I think, in a way to that old era. So ultimately, I see a better environment. I see risk coming down. So that's my overall assessment and picture of things. I think markets are going to do well, but inflation's the one to watch.
Thanks, Jabir. There's one question from the audience from Lee Irvine. What effects do you think it will have on the South African JSE?
Okay, so that specifically is no different to the FTSE 100 because the bulk of its revenues are derived from overseas. If you analyze all those companies, in the UK, I think it's something like 70% of corporate revenues that make up companies that make up the FTSE 100 derive their revenues from overseas. The bulk of it is America. I don't know the exact mix of the JSE, but a lot of its revenues are derived from overseas. Now, depending on the portion that comes on the premise that the dollar will just continue to strengthen against the rand, it already has. It has, by the way, against virtually every other currency that I've been looking at. It's smashed it. Then in the conversion back to rands, you're going to benefit, aren't you? Because the headline revenues are going to get converted at a lower rate. Sorry to sort of compare that again to us, but when we voted for Brexit in the referendum, the pound slumped, and overnight it was almost like, some people called it the Brexit dividend. Fund performance shot through the roof, and it took a while before people understood. I think the JSE won't be as affected as people think. I think overall, actually, it will probably benefit because South Africa is also a commodity-based country. You got to look at the impact on commodities. Now, with the dollar rising, there will obviously be a drag effect. So gold and all these other minerals are going to some extent, suffer on the back of that. But against that, I would expect US consumer demand to rise, and I would expect global demand to rise because oil prices are going to remain low and even go lower. I can actually see them settling in the 60s. The other reason is not just US shale production that's doing the damage for OPEC, but it's also the energy transition to alternatives that's doing the damage. It's much quicker than people make out. So that increased demand is going to generate demand for commodities. So there will come a point where, after a while, fundamentals will exceed the currency impact. So overall, I mean, I'm not turning bearish. This is just an initial impact.
Yeah, I see the rand is strengthening at 1740 this morning.
Okay,
But
right.
yeah, I guess the interest rates lowering is probably a good thing for Skybound funds, given the debt positions that we look more favorable compared to fixed income.
Yeah, definitely. Yeah, definitely.
There's
I'm not bear. I mean, you know my views on this, Ross. I'm not bearish on. I think the new government in SA, um, it all comes down to how somebody views an economy like South Africa. So, I've said this countless times to other people that What's more important is not how you get your money into a country, it's how you get your money out of the country. And critically, can you get your money out of the country? As far as emerging markets go, South Africa is a fully convertible, has a fully convertible currency, which is an absolute godsend. It's the reason why it's the first go-to market for so many emerging market fund allocators. I've seen this with my own eyes. You know, that's the first call they put to a desk down in Joburg somewhere to actually buy. So you kind of have to ask yourself, well, what would change that thinking? And what would change it is if there's a complete breakdown in the governance and justice system, which is the one component that I've never seen. Never
Mm.
seen that.
Yeah. Yeah, the GNU seems to be doing its job and working, even though it might be a little bit slower than we all want, but it's still
Yeah,
working.
yeah, correct.
There's another question here. Any
Mhm.
thoughts slash opinions on why the Democrats got so beaten, given that all research showed a tight election? Great
Yeah.
presentation, Jabir, and yeah, thanks so much
Yeah, thank you. No,
from
thank you
that
for that.
one
And
gentleman
it's
there.
actually it's a fantastic question because this is circling back to my point earlier about look at the actual percentage voting. This is something now that this is a slide I will always refer back to if we should ever have a repeat of this situation. I don't think we will for a while because I strongly suspect that this will definitely be Trump's last term. You know, the man will be in his 80s after this. Um, I think this term in office is very much about succession planning. But why were they so off? You know, this was an absolute repeat of the Hillary Clinton saga. People thought she was going to kill it, and she didn't. It was a complete shock to her. And I genuinely believe that Harris thought she was going to win it. And it was out of sheer embarrassment and shock that the address that she was going to give, she then cancelled and gave the next day. So coming to the reasons why, it's the same old thing. It's classic Donald Trump. He managed to appeal to those segments. I had a look at where he got those extra votes from. More blacks voted for him than normal. I mean, overall, they still went to the Democrats, but more, particularly black males, voted for him. Hispanics, even after the bashing that one of the guys gave at the convention, remember he referring to Puerto Rico as trash or whatever, more Hispanics voted for him than ever before. Thirdly, I refer to the Arab Americans. That was a real shock to me, real shock, because I thought, they might not just they wouldn't vote Democrats and leave it at that. They actually voted Trump. So what you're seeing, and then there's a fourth factor which is critical here. No other Republican president has ever made such great inroads, even though they still lost overall to the Democrats in places like New York and California, two Democratic strongholds. You have to ask yourself um, that what is it the Democrats are doing wrong that Trump is getting right? And I think it comes back to this age-old thing around leadership. There's some unfair criticism towards Biden. The whole inflation thing, you've made my life hell economically. I'm finding it tough. Look, that's not his fault. Okay, he had COVID, and then just when it looked like things were getting to grips on that front, suddenly you get Russia, Ukraine. And people don't understand inflation. They don't realize that if a widget costs $100 and it goes up by 10% to 110, and then after that the price stays the same, inflation will tell you that it's zero inflation. But the widget still costs $110, which to the poor guy on the street is expensive. Now translate that into household bills and fuel bills. You can see why they feel miffed. So all these factors come into play. You now have a president who says, I'm going to bring inflation down. I'm going to bring your home bills down. And I'm going to do it by attacking the energy market. And I'm going to deregulate. He's getting out to all those different areas. And there's a last factor here why they were so wrong. And it's the way polling is done. Um, I follow a site organization called Real Clear, which is well known in America and outside. And they summarize all the different opinion polls that are taken on a weekly, almost daily basis. And there are certain rules that I've learned. Never use averages. Averages are so damn misleading. The only one that I paid any attention to was in the final week of the election. And that actually showed marginally Trump ahead. And at that point, if I ever placed a bet, I would have said Trump was going to win. But never did I expect that he would win by such a margin. And that difference is because he managed to reach parts that, I can see why Arab Americans would refuse to say that they were voting for Donald Trump. Put it that way.
And then just one last question again from Lee. Your view on the dollar rand over the next 12 months. I know we've spoken about this sometime up and
Yeah.
down, and we know the history in the past. And looking on a 10-year view, the rand appreciates at roughly 7% over a 10-year view.
Hmm.
So is it looking good right now on a 10-year basis? Probably.
Okay. 10 years. John Maynard Keynes said, in the long term, we're all dead, right? So I'm going to struggle to forecast 10 years out. I don't even know how analysts forecast beyond 2 years. That's the furthest I can see. What I will say is that I think it's different for South Africa this time. This new alliance is going to what it's going to do, to my mind, is plug those gaps in the way the country functions. And that's important, so the power issues that you've been having down there, the water issues, I think those are going to become a thing of the past. I mean, I don't know if you've had any power outages lately at all or not, but
Yeah.
that's all going to subside. I think as an economy you're going to become so much more self-sufficient than you already are, and as a country you've already made progress on that front. Africa, as somebody who comes from East Africa, and I've seen this very clearly, and a lot of the rest of Africa is not as well positioned as South Africa. They people become resilient. They become incredibly resilient, and they start by becoming self-sufficient. So a new regime that fosters the private sector, combined with rising consumer demand, I think that's going to bode very well. And if inflation does kick in, then that's going to benefit commodities. That's a later story to come in, at the earliest back end of next year. Otherwise, we're going into year 2 of Trump. So I'm not bearish on the rand. I'm really not. I'm still finding reasons to be bullish.
Great. Yeah, Jabir, thank you so much. That's all the
Pleasure.
questions we have in the chat. And yeah, thank you again for joining us, and thanks for all to Lee's clients and partners and friends. I think it's been a great chat and appreciate your time.
No, thank you, and thanks for stepping up, Ross, and thanks to everybody else for joining in on the call. That's great.
Thank you so much. Cheers all.
Thank you. Bye bye.